I am Raj from Gain Skills. I welcome everyone to this webinar on transforming BFSI through technology, strategies for future success. We are excited to explore the innovative strategies reshaping the BFSI landscape. We will delve into key insights, trends, and best practices driving digital transformation and success in the financial sector. Let's begin this enlightening journey together. With this, let me introduce our moderator of the day, Mr. Amay, who is the Director Cybersecurity, Privacy and IR at EY, along with the panelist, Mr. Avini Keshav Rao, President, Digital Banking Yes Bank, Mr. Ankit, who is the Deputy Vice President, Embed Finance and FinTech Partnership, Kotak Mahindra Bank, Mr. Sanju, who is the Cloud Solution Director, FSI in Oracle JPAC, Mr. Piyush, who is the Senior Vice President and Head Innovation at Tata AIA Life Insurance, Ms. Nilalakshmi, who is the Transformation Program and Customer Service at Bharti AXA Life Insurance. Over to you, Mr. Amay, to take the discussion forward.
Great. Thank you, Raj. Am I audible?
Yes, you are audible.
Great, thanks. Hi, good afternoon, everyone. My name is Amay Subhash Lakish. I'm Director of Cyber Forensics and I am Privacy from Ernst & Young. So today's webinar is with respect to the technology transformation in BFSI through where you can focus on the future success, how you build a different strategies. Where we do see that technological advancement have enabled the development of the user-friendly mobile apps where we put everything on the fingertip, right? The online banking, everything at now a little bit of ease, and we also see 90% of the operations and the functionalities may be available next 5 years, which will be online on. And this kind of solutions provide consumers and customers the convenience of accessing their accounts, making the payments, transactions, managing their finance from their home, right? And also, banks increasingly using the AI/ML technologies to enhance the operational efficiency, identifying the different frauds which are happening, and of course, improving the customer experience. I'll say a unique experience, right? And when many experts claim that this kind of powerful technology transformation will shape the future of banking, wherein by 2030, AI will save more than 1 trillion for the banks and the financial institutions. With that, in today's panel, we are going to talk about embracing the digitalization, investing in cybersecurity and data protection, utilizing the blockchain. We'll talk about the AML, we'll talk about the regulatory technology, we'll talk about the insurtech as well, collaborating with the fintechs, scaling of the workforce, sustainable finance, data analytics, and open. Right. With that, we'll open the panel and start with Mr. Piyush Gupta, who is Senior Vice President and Head of Innovation, Tata AI Life Insurance. Piyush, my question to you is, what are the most impactful technologies currently driving the innovation in BFSI? And how can the organization effectively leverage these technologies for competitive advantage?
Thanks, Amay. Good afternoon, everyone. I hope I'm audible okay. I mean, your voice was breaking a little bit.
Oh, is it? You're audible.
Okay, great. So, I mean, thank you for the question. And, I think as technologists and as business heads, we all grapple with this question or with this thing that, what technology will give us a competitive advantage. I think in my point of view and in my role as head of innovation, we are always looking at that next big thing, right? What will move the needle? But I think if we all look at it overall and over the years, I'd say what fintech has done or what retail has done, I think those technology landscapes have not really changed. If we come to BFSI, my suggestion or my response to the group here and to the audience is that all those technologies still make sense. So if I'm asked this question, I'd say I have a bit of a list here, right? Let me start with a few, just calling it out. First and foremost, getting your data in place, very important. And we always talk of data as a new oil and all of that stuff, but the whole point is you need data, and you need it in a place where it's accessible, it is manageable. So my first recommendation, good, decent data lake strategy in place. Right, we have had warehouses, we have had all sorts of stuff over the years. I think in the modern world, having a decent data lake strategy where your disparate systems, where your enterprise core systems are feeding data in the right way, some in batch mode, some in real-time mode, depending on your on the scope of that data. The data lineage is feeding data to the lake, and once you have it in the lake, then you have the strategy of who's consuming it, right? Whether the analytics team is consuming it, whether a front-end application is consuming it, whether your AI/ML team is consuming it, all that can be put together. So first and foremost, have a wonderful or a decent, let me put it that way, strategy in place. That's number one. Second, I think the whole piece of going digital is important. And to that effect, I would call out two specific stacks. One, work goes on everywhere, right? Get a good OSAT platform in place.
I think Piyush got dropped. Am I audible, Raj?
Yes, you're audible. You can take
Piyush,
the
you're
next
back.
question. I'll ask him to join again.
I'll do that. Sure. So
Hello.
meanwhile, Piyush got...
Did
Yeah, hi
we?
Piyush. Are you back?
Okay, I'm back. I don't know if it was my end. So, basically, you have a lot of paperwork coming in, you have a lot of scanned documents coming in. Automate that piece, which will save a lot of time and effort and energy, not to mention a lot of money as well for your enterprise. The third piece in this line would be utilization of voice-based technologies. Especially in customer service space, also in operations, back office operations, using voice, using speech to text, and then other downstream, technologies which cater to handling or automating voice-based inputs and then doing processing out of them would really, really beneficial. Again,
I think Piyush dropped again. There looks like there is a network issue. Piyush, are
yeah,
you there?
I think, yeah, I'm here. Can you guys hear me?
We lost you for 10 seconds.
Hello?
Please continue.
Yeah, the Zoom meeting is dropping out. My network seems to be full, so apologies for that. So as I mentioned, data lake, OCS voice. Then let's move on to, one of the things that is, while it's a mixed bag, and I call automation, RPA, as the Trishanku of the software engineering world. But from a technology perspective, there are people who love automation and there are people who hate.
I think he got dropped again. So we'll move to the next panelist meanwhile. So we'll move to Mr. Sanju Surendran Nanthan. He is a Cloud Solution Director, FSI, Oracle Japan. Mr. Sanju, what are the challenges and opportunities in implementing AI/ML in BFSI? And how can these technologies be ethical and responsibility?
All right. Thanks, Amay, and thanks everyone for giving me an opportunity. Am I audible?
Yes, you are.
Okay, thanks. So thanks for the question. So in my role, I have been looking at cloud solutions for financial services industry for the whole of JPAC, as you've noted out. So and one of the major areas of innovation that we have seen in the last couple of years has been AI. So when I say AI, it includes your traditional AI as well as the generative AI, which has been the talk of the town, if you like. So coming to financial service industry, we know that this industry has been one of the active users of latest technologies, particularly AI and Gen AI. And based on a recent survey done by McKinsey and other research analyst groups, Almost 20% of the total market is consumed by financial services in terms of consumption of AI and Gen AI technology. So that talks about the the rampant usage and the significant amount of use cases that exist within the industry, and for this kind of technologies. Also, in terms of areas, you asked about the opportunities. So in terms of opportunities, we have, for example, there are many areas where AI and Gen AI have been used. But if I were to just call out a 4 or 5 top parameters or top use cases, there'll be like financial forecasting, risk management and fraud detection. And in the area of customer experience, it will be like predicting the customer usage patterns using all the data that is available in the market. Of course, I'll come to the challenger side and the ethical use of it, but in terms of just the opportunities that exist, these are the areas. And then credit scoring is one other area where you see rampant usage, where more than a human aspect, the machine is able to consume tremendous amount of data and produce insights, which definitely has helped in terms of improving the productivity and efficiency gains in the industry. So another statistics that was done by S&P Global Market Intelligence Study was that 40% of financial services companies rely on machine learning for use cases, for these use cases like financial forecasting and fraud detection. These are the two key areas. And today, of course, with Gen AI, we have newer use cases in terms of investment advisory, where you can create narrative reports, advices to customers, investment advice based on, it can be a very nicely packaged presentation to the customer, highlighting all the areas of risk and, future forecasting of cash flows and balance sheet and everything else, so that the investor can take proper guided information and based on that take decisions as to whether to invest in a particular company or not. So just to summarize the opportunities, then you have the risk management, fraud detection, customer service, and hyper personalization of services. Algorithmic trading is another area where we have seen a tremendous amount of usage, where you have quant trading and high frequency trading, which use a lot of AI. And of course, credit scoring and loan approval. So these are the 4 or 5 areas if I were to call out. Now, naturally, with all of these innovations that are happening, there is definitely a clamor for tightening the security aspects, data privacy aspects, data trust aspects. So in terms of challenges, if I were to call out the key challenges, is one of them is, of course, your cybersecurity, which is a very growing area of concern today, especially in the area of AI and Gen AI. You have multiple parties in the ecosystem. You have typically you'll have a third-party vendor that is providing a service, because mostly the banks or institutions will not be spending a lot of money in doing in-house development, because in order to really keep pace with what's happening in the industry and overall use cases, it's very difficult to keep pace with an in-house kind of setup. So 99% of the organizations would rely on third-party vendors to provide the AI services, right? Now that AI services could span an entire area of spectrum, whether providing bespoke, black box kind of a embedded AI service, or it could go up to being a very flexible way in terms of creating your own models, managing your own models, and using your own data. So it could be anywhere in the spectrum, right? So naturally, with all of these areas, there are challenges in terms of data privacy, because naturally the data, because it's third-party solution that is using, naturally there's a concern whether the data is going out of the ecosystem to a third-party ecosystem, right? That's the number one concern. And added to this is the regulatory concerns in terms of data quality also is an aspect, right? We don't know what kind of, because only as per the data quality, you'll get the results. So garbage in, garbage out. So the data is not good, then the results won't be obviously accurate. So emphasis on data quality, data privacy, trust. So these are the aspects that regulators are constantly watching, and most of the major regulators in EU and as well as the US have come out with guidelines to clearly call out these aspects in their usage of AI. So naturally, you have, so what needs to be done in terms of meeting these challenges? Because naturally, there is no going back on the usage of AI and Gen AI. That is a way forward. But there has to be a proper governance framework, a proper framework to make sure that the use of AI is ethical, is responsible, and most importantly, explainable. I think the explanatory aspect is the most challenging aspect that I have seen personally talking to the customers and various participants in the industry. The results should be able to be explained to the end. For example, if you take an example of a credit scoring for a customer, right, who has applied for a loan. Now you have an AI model that runs the credit scoring and produces a result. And for some reason, the result is negative, and because of which you deny the loan. You should be able to explain the results to the customer that because of these reasons, the loan has been rejected. Otherwise, very well, they could go and sue the organization that is extending the loan, right? It's quite possible, because unless and until you're able to explain what are the grounds on which the loan has been rejected. So that is where one of the challenges in AI is most of these models, as I said, third-party models are embedded in the different applications across the ecosystem. It's very difficult to really do an auditability and explainability of the results. So that's one major area of concern, which has to be addressed as far as ethical and responsible use of AI is concerned. So what the organizations need to do is to come up some kind of a heat map, right? A heat map that has use cases on one side and all the risk areas on one side. And then you highlight for which use cases, which challenge or a risk area is categorized as low, medium, or high. Because there'll be tons of risk, tons of areas of challenges. You can't really focus on everything at the same time. You really need to prioritize and make sure what are the focus areas that need to be addressed as a priority. So this is a very critical aspect that the AI governance team. So obviously, naturally there are different roles within the organization that will span out as an outcome of this. Having a governance officer, having a data engineering team, having that means a data scientist, and then you have the product managers or the designers who are actually designing the product. For example, loans, credit scoring for loans. So which means from the loan team, there'll be a set of designers or product managers. Then from the technology side, there'll be data engineers. Then you have a governance officer who AI governance, there's a role. I mean, if you could call it AI governance officer, is that responsibility of that officer to make sure that the standards and all the rule book is laid out. And this, based on the heat map of mapping the use cases to the risk areas, is extremely important to focus on those areas. So for example, if I take an example of customer experience, right? You do a lot of mining of the data and come up with a recommendation of what are the products that a customer is likely to use. And then you target the offerings, like, so for example, credit cards or home loans or whatever. So you scan the entire customer usage, and then based on market information, a lot of other things, you'll come up with a proposal that, okay, this customer is likely to use this product. So here, naturally, the data privacy and quality is utmost concern, because you are relying on underlying data to be able to come up with this decision and then offer to the customer. So in this particular case, it's a high risk area. The data quality and privacy would be a very high risk area. The same data quality and privacy could be a low risk area for some kind of a creative content. So generative AI also creates creative content, right? As I said earlier, some kind of investment report, analysis, management analysis. So here, because it's internal usage, the data quality and privacy may not be a significant concern. So in this way, you can have to, sorry, was there any question or?
No.
Sorry. Yeah. So in this way, we can actually categorize the different areas of risk according to the use cases. And this goes a long way in terms of having a proper ethical and governance framework. And that should be the guideline for the banks and financial institutions to basically industrialize AI in the organization. And that's the way forward, because naturally with this area is only going to grow and is only going to become more and more complex as we go, because we know that a lot of people are there which will put all these things to malicious use, right? And that we know, deep fakes, a lot of things are happening in the market. So we have to be very, very careful in terms of how we industrialize this kind of technology. And there has to be obviously a human aspect. We cannot just rely the results that are produced by a model. There has to be a proper governance and an explainability aspect that goes inside that, and for which you need the right kind of talent, which is also a challenge to get the right talent to recruit. So I think those are the key areas, challenges, opportunities, and some of the ethical concerns. Yeah, thanks.
No, absolutely. I think that was like a good life cycle you have explained with the practical examples. Thank you very much for that, Sanjay.
Thank you.
And with that, even we talked about AI, right? And just on the lighter note, AI is like we go to the wedding reception, right? And there will be one or two kids who will be in all the pictures and all the photos. Today, AI is that kid, which is everywhere, right? In all the photos and all areas. So moving next, we'll move to Mr. Aniket Thakur. He is the Deputy Vice President, Embedded Finance and FinTech Leadership, Kotak Mahindra Bank. Aniket, how do digital platform and FinTech collaboration disrupt the traditional banking models? And what strategies should traditional institutions adopt to stay relevant to and be competitive?
Hi, thank you so much, Amay, and thank you for having me in this very insightful webinar. I mean, all the thoughts exchanged by far have been really on point and pretty relevant in today's scheme of things. So just answering your question to share my views, digitization era is anyways disrupting a lot of use cases today. Compared to a traditional banking mobile application or a traditional banking platform. We've seen a lot of innovation over the last few years We have umpteen examples. A lot has been talked about in terms of chatbots. A lot has been talked about in terms of uh, enhanced customer experiences. Why was there a need for a lot of end users to shift to better, better UIs or better UXs? Because things were made very simple in their lives. Because banking has now become, in fact, any transaction pertaining to banking has now become a part of everyone's routine. So digitization was something where by the time banks picked up pace, not that banks were not the first movers or the banks were not looking at it as a roadmap in all their existing user journeys, but there's been a massive disruption that was created by fintechs, rightly so, in terms of the whole advantage they had to them, that they had all the freedom of space and mind to just think outside the box, sit in a room, not think about regulations much, not think about the regulator much, which has got both positives and negatives. I'll just touch upon those. Uh, in the quest to uh, establish themselves and lay out a lot of room of thought for a lot of banks, fintechs have come up with some amazing user experiences, some amazing user journeys, and they still continue to be the key. A lot has been spoken of lately about the bank and the fintech marriage not being on the cards going ahead. Banks are not able to cope up. There's a lot of regulation and there's a lot of regulatory pressure, but I kind of have a different opinion. uh, Fintechs, yes, they started off very well. They were ahead of the race. They were ahead of a lot of things. They brought in a lot of innovation. They gave that opportunity and they gave that room for the banks to revisit, to relook at digitization strategies. In fact, they became a motivation for a lot of banks to start building things, if not at the equal pace, but with the desired outcomes that fintechs are trying to solve and the problems that the fintechs are trying to solve. So, of course, when you try to innovate a lot, there is something you tend to not think about at that point in time, which is to do with data protection, which is to do with a lot of architectural uh, diligence and a lot of compliance that needs to be catered to. Hence, banks come into picture there. Banks uh, have completely understood the necessity of innovation. Banks have also understood the existence of fintechs is still very relevant. Banks have understood the kind of digitization that is required, to what degree. Not that banks were not innovating, but the degree of innovation and digitization is just uh, picking up quite well with a lot of banks today, and hence now that I would say the situation is trying to come to an alignment zone in terms of the regulator quite conveying their expectations and the controls that they really want to be applied by the fintechs or by the bank or by both. Fintechs have now understood uh, they have to be complacent now, not just with innovation, but they have to be complacent and they have to be quite adjusting to all these regulations now. Fintechs and banks are still working together as we speak. I'm sure Ivani Keshav sir will have the same opinion, and a lot of other respected gentlemen in the call. Uh, yes, the pace would have gone down. Yes, you wouldn't see things coming up every other day in terms of innovative use cases, in terms of innovations. You may not see the announcements of bank marrying to a fintech or a fintech marrying to a bank for a innovative technology collaboration or a business collaboration as much. But the reality, underlying reality is uh, they have understood the line that has been drawn. Uh, a lot of thing is under check. A lot of innovation is under check. A lot of things are being uh, fairly evaluated by both. I would say, in a layman term, finally there is an alignment between these new age companies and emerging fintechs and banks. Both are thinking alike. Both are thinking and trying to implement things at the same pace. Uh, it's just that the bank is regulated and the fintech is close to being regulated now, with a lot of compliance audits, with a lot of uh, fintech intervention, regulator intervention that is now coming into fintech innovations as well. So digitization continues to be the key. Uh, Fintechs will continue to be approaching and somewhere depending on a bank for any sort of a collaboration. Banks will continue depending on the fintechs. Uh, it was all about the necessary correction that was needed. It was much needed. Thanks to COVID, we got that. Uh, I would say we got that opportunity to think that a lot can happen in the digital era, which we were not exploiting. COVID gave that, classic problem statement to us, and hence, we are sitting in the middle of some remarkable innovation and remarkable discoveries that have happened in the industry, which the world is talking about. Some banks have come up with some amazing user journeys and use cases which other banks are trying to cope up with, and even fintechs are looking at that. NPCI still continues to be the biggest and the most remarkable fintech, I would say the world has seen, and not just the country. uh, so be it assets, be it liabilities, be it payments, uh, we will still continue to evolve. We will still continue to have dependencies. Things can only work when there's someone who can think with a slightly non-conservative, wearing a slightly non-conservative hat also, which is a fintech. So that's all to share my initial thoughts. I believe there was a question that had come. I don't know if it's the right time to take questions right now. I just wanted to check with Amay.
Aniket, I think probably we can take it at the end.
Sure.
When the time permits. Yeah.
Yeah. All
Please
right.
continue.
Thank you so much. Thank you so much.
Great. Thank you very much, Aniket. With that, we'll move next. Nilakshi Shalla. She is head of transformation program and customer service, Bharti AXA Life Insurance. Nilakshi, what role does data analytics and predictive modeling play in risk management and customer experience enhancement in BFSI, and how can organizations maximize their benefits?
Yeah. So good afternoon, everyone, and thank you, Amay, for giving me this interesting question. I come from the life insurance industry and having a good experience of working in the customer service and operations and operational risk. I think I can add a lot of use cases for this, because a lot of the financial industries and life insurance in particular, we are forever playing with the data. Data is God, the oil, as we say, for us. And whether it is the market segment that we decide, or which we choose, where we have to sell the product, or the type of sellers who are best suited for a particular product or a particular geography, or the product that we want to create and sell, and the customer which we want to target. All selection of all of these elements will require a lot of predictive analysis, a lot of risk management techniques, because at the end of the day, what you want is the revenue and the value for the cost that you have put in, to create all these products or the geographical reach out that you are doing. So from that perspective, predicting the future and being somewhat like the God becomes very important here, because whatever are the risk elements here, you want to act against them. You want to understand what are the situations which can be adverse, and how do you create a counter strategy in advance. For example, if I may tell you, because I'm part of operations, so I'll have more use cases for that. Whether it is the claims, so anticipating which is the customer which has the probability of giving me an early claim, that is what I start right at the time of onboarding. So we have customer profiles created in all the life insurance companies, where we know that for this age group, if it is this kind of educational background, this salary, or the income range, this is not a good profile for me. Now, all of these insights come from a lot of data analytics and the predictive analysis that we do. So, we at Bharti AXA as well, we have a very dedicated, intelligent data analytics team, which is putting up the historical data together, and then trying to assess how will that data give me the perfect customer or the best customer profile which I should onboard. And in fact, to the extent that even the sellers now come and ask us that give us that profile that we should target. That is the criticality of the data analytics and the predictive intelligence that we put in knowledge in our systems. Now, apart from that, what also becomes important for us as an entity is to understand who is our customer. And if we have different personas, there could be a tier one customer who's educated, who is using digital services, needs a certain type of service intervention, or prefers a certain touch point. So that's one persona for me, and I'll create a customer strategy which will be unique to this customer. Then I may also have a tier two customer who is not so well versed with digital touch points, would actually like an assisted journey. So this is the second persona, and I'll have another customer strategy for this person, which is assisted, which may be through the video based servicing, which a lot of companies are doing now, or it could be the branch based servicing where the person goes to the branch and my executive is actually helping him out to do the service transactions. Then the third persona is a tier three who probably always needs somebody to guide him and somebody to do it for him. For them, I'll have the physical forms, and all the touch points will be physical. Okay. Now, with all of this, what also becomes important for me is to assess how what would be my customer retention. Because once you have onboarded, this data insight will help me understand a certain persona, what is he interested in terms of milestone or the money. Is he looking for protection? Is he looking for investment? Or is it a blend of the two, given the customer life stage? Like if somebody is unmarried, then he may need a certain money when he is getting married or when the first child is born. And if somebody already is married, has a child, then at the time, when the child turns 18 or the child is of marriageable age, those are the interventions. So data gives me these kind of insights that which are the different profiles for which I have to create a storyboard and pitch those kind of products which become important or which will appeal to that customer. Okay. So from that perspective, knowing your customer and then creating those kind of engagement plans for those customers, become very imperative. And this is what helps me keep the customer with the company. So my retention rate increases, the propensity of the customer to pay premium increases. And there is a lot of data analytics that happens here as well, that there are some customers who, if they are nudged within first 5 days of the month, have the propensity to pay, higher, which if I nudge him after 15th or 20th, then the likelihood of money coming to me is not very high, or is low. So those are the kind of insights that, we deploy in our day-to-day business. And they actually help us in not just one area, but right, like I said, from the time of customer onboarding to customer engagement strategy, customer service strategy, then to customer retention, propensity to surrender, or which would mean actually exiting the policy, taking your value and exiting the policy. And apart from that, the claims as well, which is the final moment of truth for any life insurance industry, that if the inherent need of the customer was protection, have I been able to fulfill the need, and is it the right claim that I'm paying? Because then the P&L also becomes important for the company. So this predictive analysis, data analytics, risk management, all of that comes hand in hand, where the selection starts right at the time of onboarding. So right selection becomes very important, and the risk management analysis that we do for the customers on board helps me to select a good customer right at the start point. So that is how we deploy, these all these useful techniques, and then create an ecosystem where we have onboarded the right customer whose needs gets fulfilled, and I also as a company, derive a profit or a benefit out of that product.
Absolutely. Rightly said, it enables business right in a right way. And we know the Y2K was like, the era where it was asset driven. the ISO 27005, I believe 27001, 2005. Then 2013 came, it was a process driven. And now it is completely, everything has become a little bit on data driven, right? So rightly said and quite insightful, Nilakshi, with that. We'll move to the next one. Mr. Ivani Keshavrao. He's president of Digital Banking Yes Bank. Mr. Ivani, how can BFSI organization effectively navigate the shift toward a cashless society and digital payments, ensuring inclusivity and the security of all different customer segments?
So fundamentally, if you look at all the cashless societies in the world, it starts from the centralizing of the whole digital infrastructure. Whether it be, let's split digital infrastructure in two pieces. One, where you have the digitization of the rupee itself, which is ongoing as we speak, the digital rupee, which is being pushed into the market, and also the UPI front, where the current fiat currency stored in the banks are also being converted into the digital aspect. So the first element of any cashless society is the digital infrastructure for a seamless transaction. Now that they are again split into two parts. One where it is centralized, the digital infrastructure is centralized, and then there are the hub and spoke model where each bank builds its own digital infrastructure, dovetailing back into the central infrastructure. Now, while creating all of this, what we've seen is we have to mentally push for a design accessible digital platforms. That means any new integrations, the future readiness of all of those also have to be blended in when we are designing, and that is where I think the nation is also going which is where I think the nation is also going towards right now. The third piece, what comes is on the digital payment options. As you've seen in the market, we have QR codes on one side, the POS on the other. You have UPI, and then you have the wallets and other pieces. Now, with the digital cashless society, these options will keep on increasing. Tomorrow it may come into a wearables, or tomorrow it may come into your smartwatches or biometrics. So what happens is you have to keep your customer also educated around all of those elements. So moving towards a cashless society has multiple aspects to it, which you have to start focusing on when any bank also wants to venture into it. And in a BFSI segment, the whole thought process is very protected when it comes to customer education and customer usage, and also guardrailing the cyber security measures around the customer. So one of the key aspects when we start designing for a cashless society would be also the security aspects around the customer. Now, once all of this is in place, that's when we start, the banks or the BFSI sector goes outwards. And wherein you can see integrations into the fintech firms, the innovations coming through the fintech organizations, or the kind of new age, AI companies which are coming up with the Gen AI technologies, and all of those pieces start dovetailing into the existing technology. And that enables user with the right kind of literacy, the financial literacy, to engage themselves into the cashless society or the usage of the application which enable the cashless aspect in the transaction. Now, once those pieces are established, we look further ahead where we know we can collaborate and go and provide these services to the underserved communities. And that's where the true cashless society aspect starts coming in. Once we have the retail side of it, then we look at the B2B segments and the B2B2C segments and all of those elements where we have the small and medium enterprises, which are mainly cash society in cash-based transactions in our society, much like your Arthya mandis or your port or the fish markets, or what we have seen where the bulk of the dealings are still done in cash. And then that's where the ease of these infrastructures, the applications, the dovetailing into fintechs, the innovations, and the financial literacy piece, and engulfing all that with a sense of security, will ensure that the society goes cashless. And that's where the BFSIs are headed towards, and that's where all the kind of efforts are being put in. Now, this is one aspect of it. The other aspect is whatever innovations you do, it has to be under a guardrail and the compliance, regulatory compliance or the regulatory purview. You cannot escape out of the boundaries that RBI would set or the NPCI would mandate. And that is the major hurdle right now, where we have one side where fintechs are pushing towards innovation, one side where banks are being conservative. The need of the hour and the ask of the society is for an ease of on all of these aspects. And RBI is trying to balance all three to keep the economy from tipping and the money market from money market to be stabilized, so that nobody takes an advantage out of the whole situation. So, I mean, overall, if you look at it, the path towards a cashless society is a step-by-step process, but going in an agile mode at this point of time as we speak.
Great. Thanks a lot, Keshav, discussing on these elements. We'll move back to Mr. Piyush Gupta. If you're back, Piyush, are you there?
I am here.
Yes, I think you got dropped because of the some error. You want to continue on with the question?
Sure. I think it's pretty much been called out by other speakers. I think I had two other things that I wanted to call out. One was AI/ML, and the other piece is Gen AI. And I think again, as I mentioned, it's been called out. But the only thing I would probably call out is that be a little grounded in this space. The challenge that in this technology area is that these are probabilistic systems, and they will never be 100% accurate. One of the dissonance that we always have, is that the expectation is the system will always, it'll be 100% accurate. That will always be a challenge. While you're innovating, while you're looking at doing things, using these technology stacks, you will run into this challenge that will not give you a 100% result or an outcome. And that expectation setting with your business partner, with your stakeholder, has to be done upfront. They need to be on the same page with you, and then go from there. Start with 70-80% accuracy levels, and then see if you can go up to say 90. And if you hit 90 in a true sense, it's a good achievement. That 100% never happens, I can tell you. And I'm sure others on the call would do that as well. The other piece is, while there's a lot of hoo-ha about Gen AI, there's a lot of hot air too. So I would warn everybody, be cautious. It gives a lot of, there's a lot of fancy stuff going around with it. But in the enterprise and the business scenario, you have to find real, tangible use cases where Gen AI will give you what you need. I've always said that writing an essay or writing a poem is not what the business needs. Business needs are more specific, more exact, and Gen AI may or may not perform to your expectations. So play with it, use it, and then see what makes sense for you. So that's what I would end with, from a technology stack perspective. Thank you, Amey.
Thank you very much, Piyush. I think to summarize quickly, I have noted down some keywords from all the leaders who were today's call. So Mr. Piyush was talking about getting the data in one place, right? It's about data centricity, then having a data lake strategy, then customer service, back office also using a different automation needs to be done, like speech to text, etc. RPA is the element he have touched upon, AML and generative AI. These are the elements he have spoken about. Mr. Sanju has spoken about traditional AI, generative AI, then financial forecasting, predicting the customer's requirement, fraud detection, credit scoring, narrative reports, highlighting risk, decision making, customer service, cybersecurity, third party are providing these services on AI. Regulators are watching usage of AI, are they ethical and explainable? Use cases versus the risk areas, how the AI governance can play a role, data quality and privacy, along with the human aspect. Mr. Aniket has spoken about different elements of digital era, innovation. He has spoken about chatbots. He's spoken about how the better UI is, a kind of a demand in today's world. Disruption by the fintechs, and he have given the good examples and use cases as well. how the user experience improves with that. Data protection is a key element over there. And it should be start even with the initial stage of the architecture itself. And they have to follow the compliance, and they are, where fintechs are trying to comply with the regulation. And that's where this marriage of fintechs versus bank is maybe essential and will be essential. There always can be two sides on that. NPCI has become a remarkable fintech as per. Moving next to Nilakshi Shalla, she started with data. Everything is about data and around data, and it's not about negative side. It's not about rejecting someone's claim or something with the data. It's about enabling the business in a right way and cater to the right, address the right customers, the right set of customers at right time, because it's a matter of education as well, where this predictive analysis will play a vital role with the data analytics, and the risk management technology should be also there with that. Predicting the future will become a little bit supportive, I would say, and with the specific rules to be performed with that. Targeting the right set of data, unique customer experience can be enabled. For that, you need to have a right customer strategy. Customer retention rate increases. What are the customers looking for? You get to know about it. So you have to know your customers. Enabling the business is essential and is a key element. Like there is a life cycle from onboarding the customer, having the engagement with the customer, then providing the services, having the retention, at the end passing on the claims. Moving next is the Keshav Vivani. He spoke about the different element of a centralizing digital infrastructure and couple of different components of digitalization of say rupees and the UPI front, how the digital payments have increased, where from anywhere in the world we can do the payment. We just need internet, or we just need access to our mobile phone, right? And how the digital payment option have enhanced even in small towns. There can be innovation, like our smart watches will pay the next bills, or maybe biometric will pay the next bills, which is already started somewhere. And for that, you need to have a good customer education, and they should know how to use that particular feature, right? And with that, you need to also have a cyber security where you can protect their fans, or probably their money. For that, also you need a supporting the Gen AI that should be integrated with the existing technology to get the outcome. And you have to keep on engaging with the customers, and you have to follow the regulatory guidelines. So that's all I have noted at my best. I think there is one question. Any of the panel would like to take it up? There's a question, apart from banks, does RBI understand the relevance of tech platforms, startups benefiting BFSI? Can we expect in the near future better and a conducive environment so the startup can prosper and grow? As the startup need a lot of funding, and funding doesn't come without clarity by RBI and a clear rule.
Amay, let me take that up. Fundamentally, a lot has been said about RBI being a kind of a speed breaker for startups and other pieces. It is not so. RBI has been pushing for innovation through multiple legs. They have a startup incubation center where they also call upon all the startups. They have an annual event called Harbinger, and they also have they also look out into the market before they give out any circulars or mandates with respect to fintechs or banks also. What they do is they go around into the market and have a understanding as to what the fintechs are doing and what the banks are doing. So that's one aspect to it. The second aspect is RBI Innovation Hub is also there, where they look for new kind of solutions in the market. So these are few of the steps that RBI has taken. Now, the only problem where the startups are facing with RBI is because they come up with innovations which are new to the market. And there are a lot of people in the industry who take an advantage out of it. A very fundamental problem statement that RBI has been trying to address is on the KYC and issuance of how should I say, the kind of loan issuances in the market, which are happening for on a small ticket loan issuances, which are happening through multiple fintech apps. Now, there's no governance to it. What has happened is they end up as a non-performing asset, or the whole fintech brings down the whole economy from a per se of issuing multiple loans, and then we see a lot of people not paying off those loans. Now there has to be governance around it. That's one very simple use case which I'm trying to tell you, and that's where I think RBI starts getting very stringent, and they bring a boundary as to how a business should be run. When we talk about digital transformation and money movement, RBI tries to bring out the best balance so that none of the founders, none of the startups also go into loss, or the banking industry as itself should have a balance. Now, what advice does RBI give to startups is to be cautious, to play within the boundary, and whoever has played within the boundary, we've seen that all of those players have been successful. May it be PhonePe, may it be Razorpay. You have, you have regulatory boundaries which have been crossed. There are multiple fintech partner players like Paytm and others who have been fine on, and then the last step would be to shut down the business or to put a full stop onto their current existing operations for some time. So my advice to startups would be to be very cautious when you're going to the market. Be very clear about what regulations and mandates are there in the on the business that you're doing and what RBI is stating around it, and also to be aware as to when RBI is calling out for startups to look at their innovations, and before they go into the market, be aware of it. Just be present in the RBI events. I think you will have a much clear clarity.
Just to add to Ivani sir, I think he covered it very well in terms of what clarity was needed. Yes, RBI Innovation Hub is coming up on a timely basis with a lot of use cases, problem statements where they are inviting startups, to come with solutions which in turn are being evaluated by them. Be it having multiple languages in all the banking experiences embedded, or the recent central KYC requirement that is floated by RBI Innovation Hub. But just give me a second. Yeah. So also we've been seeing a lot of banks who are coming up with problem statements, running incubator and accelerator programs, which is something that has really grown in the last 1 year. They are inviting fintechs to come up with solutions to solve those problems. In turn, the banks are ending up investing and backing those fintechs. Of course, all these solutions that are being, or the innovations that are coming up, by these fintechs are being run past RBI. So to just summarize, RBI needs to be kept in CC in some or the other way, in layman terms. Yes, there is no stoppage to innovation. RBI is very clear on promoting, encouraging, and even looking at that innovation as an investment opportunity by government or even banks. It's just that it has to be within the boundaries, as rightly highlighted by sir, and it has to be run past either the regulator or the control functions within the bank. So I see a lot of innovations coming along with the banking thought process and then going to RBI, rather than the innovations just coming on their own way and probably leading nowhere and not getting adoption because of the compliance that was not catered to.
Great. Thank you very much for that. I think hope that answers the questions, and the rest of the questions I think are already being answered by Mr. Sanju. So thank you very much for that. I don't know, it is Mr. YS or YS, you have further comment. Bigger, well-funded fintechs have avenues to overcome challenges, not the smaller fintech startups. Yeah.
Okay, my advice to Yagnesh is that, yeah, I understand what you're trying to put across here, that well-funded fintechs have avenues to overcome challenges, true. But you also look at the kind of stringent, scrutiny that RBI is doing on well-funded fintechs. In the last 2 years, all the well-funded fintechs that you have seen, whether it be Slice, whether it be Paytm, or whether it be even banking, how should I put it? Banking banking-led fintech startups, bank-led fintech startups, all of them have been put under scrutiny in one way or the other. In last 1 year, I can say at least 20 fintechs have, well-funded fintechs have been put under the scrutiny. So eventually, if you're not following the boundary, you will, at the end of the day, you will land up in a soup. So my suggestion would be to go ahead and start following it from the day one. Because what happens is when you are clear with regulations, you may not be able to get funding, or you may not be able to, you may be, tight strap for funds at the start, but your long-lasting presence with respect to the RBI as well as in the market would not be of a hindrance at the later stage.
Well said, Keshav. I think we don't have any more questions. I think in that case, we can, wrap up the panel. Over to you, Mr. Raj.
Thank you so much. So, as we conclude this insightful webinar on transforming BFSI through technology, we extend our gratitude to all our esteemed speaker, Mr. Amay, Mr. Avani, Mr. Ankit, Mr. Sanju, Mr. Piyush, Ms. Salah, and all our participants who have taken their time this afternoon and joining this webinar. Let's continue to collaborate and innovate, driving positive change and success in the BFSI industry. Thank you for joining us today. Have a great evening.
Thank you.
Thank you.
Thank you all for joining.
Thank you.